China's tepid growth is dampening sentiments across the world. Chinese factory activity contracted. Data from fourth straight month suggest contraction in July. Chinese government released new measures aimed at boosting world's second largest economy. The official Managing Purchasing Managers Index came in at 49.3, below the 50-point mark that separates expansion and contraction. This, of course, as per data by National Bureau of Statistics. Now, the global factory activity remained in a slump in July as slowing growth and weakening demand in China were taking a toll in the world economy. China post-COVID recovery is proving to be a damn squib, and the country is struggling to improve growth. What is hurting Chinese economy? To discuss that and more, joining us at this point in time is Shubhada Rao, founder of Quantico, on the broadcast. Shubhada, thanks very much for taking time out. I want to begin by asking, what exactly is hurting Chinese economy? Apart from the factory output, slow consumption, what are the pain points?
I think the pain points typically would start with the COVID era and extended lockdowns. I think China was the last of the major economies to open up entirely post-COVID ramblings over 2.5 years. Since it opened, completely opened up the economy last year, late last year, 2022, there was a wider expectation that there would be a quick rebound in economic activity, be it in the manufacturing or in the services. But unfortunately, both have stuttered, in fact, thanks to the global scenario of weakening growth momentum coming more from the developed economies, thanks to a very persistent and longer high inflation rate, leading to rising interest rates by the Fed, by ECB, by BOE. And that has overall dampened the global economic momentum. So to a large extent, this slowdown of the global economic activity also rubbed off on China. Add to that, as I said, the last of the economies to open up post-COVID had its repercussions on the domestic growth, domestic employment. Remember, China has been for some time now trying to change the growth levers from exports to domestic consumption. We cannot forget, as you rightly pointed out, the PMI data, which points to a continued contraction 4 months on the trot. But I think the key point within the PMI data would also be unemployment data. The Chinese youth unemployment data seems to be a larger point of concern, which in turn would also continue to dampen the consumption activity. Given all these scenarios and the realities of data thrown in, the Chinese government and the Politburo decided to open up a flurry of economic measures to boost consumption, including those on home sales, on real estate, which has been the longest suffering sector in the recent phase. So I think there are multifarious factors at play. Add to that, and compounding the problems, is the climate risk actually now impinging in real terms on economic activity. We just saw what happened in Beijing over the last week in terms of the pounding of rains, highest in 140 years, and so on and so forth. So you have, unfortunately, a perfect storm, what the China economy is currently facing. And, you know, the growth, which over the first quarter to second quarter, coming at sequentially at just a 0.8%, was perhaps a big giveaway of how Chinese economy will not be able to turn to be a growth propeller for the world for a longer period and longer duration. Unlike the previous crises, be it economic or financial across the globe, China used to be the perfect buffer and shock absorber. Post-COVID era, China has remained virtually absent in joining any rebound in economic activity. And to me, that sums up a larger part of the China's economic list of concerns and problems that may remain a bit durable for a longer time.
All right. I also quickly, because I'm running out of time, I want to understand what impact does that likely to have on India? We see that it is already impacting factory output all across the world. Are we, or do we continue to remain insulated, or would there be an impact in the longer run?
I think the biggest impact in economic scenario of India would be that exports are hurting, whereas the domestic growth levers are actually doing rather well, led by government-sponsored investment, capital spending, etc. And the consumption has also held relatively well, if I may say so, both urban and in the forthcoming quarters, perhaps the rural consumption will also be a support. So the biggest drag is thanks to exports, and that is more of a manifestation of what's happening globally. Impact on India, we have to segregate. The near-term impact obviously would be that of dealing with a slowing export engine, particularly on the merchandise or manufactured goods. But more importantly, I think if you expand the horizon, India stands in perhaps one of the sweetest spots in terms of attracting investment with the China plus kind of a story evolving over the last couple of years post-COVID, and India's push towards reforms, be it through PLI, be it going sequentially and thoughtfully so in securing its raw material, in ensuring the technology-enabled sectors. And when I talk of that, the semiconductor thrust by India's policymakers is a point to be noted emphatically. So all of it should, in my mind, provide a very opportune, longer-term platform for India's growth to, on a relative platform, of course, look far better amidst a macroeconomic stable environment that India provides, and fewer of the other regions across the globe are not being able to substantiate that with a greater macroeconomic stability.
All right, so it appears that India remains in a sweet spot. China's loss is India's gain, at least with the right sort of policy initiatives that the government is taking at this juncture. Shubhada, thanks very much. It's a pleasure having you on the show, a pleasure listening to you. We will, of course, try and get you back very, very soon. It's a story that we continue to track, that of, China plus one strategy so far has augured well for us, Karthik.
Absolutely, Shweta. And I think, it's fairly clear now that China plus one, the plus one is India. But I think the game is now moving from that to the world squarely focusing on India and India plus whoever else. Okay. It could be Vietnam, it could be Philippines, it could be whatever, because the world has seen that too much dependence, over-dependence on China has hurt supply chains, has made China take this very, very aggressive stand on its own resources, on its own factories, on its own pricing, and on its own currency as well. So overall, I think the world has realized that a buffer has to be built outside of China. India happens to be the most opportune place right now to make those investments in. We are seeing those investments come in already, but I think India also has a long way to go to catch up, not just in the sheer volume of trade and the size of the economy, but even getting our own act together when it comes to critical industries like semiconductors, like EV batteries, and becoming a manufacturing hub in equal measure as a services hub that India has been. That is going to be a slightly long road, but we'll have to take that difficult path and get there as quickly as we can.
All right, long road, difficult path. We're getting there eventually, and we bring you all those details right here on News9. Thanks very much for watching.